Listen, I'm pretty sure this lazy trading strategy beats the rules that 99% of traders follow. You don't need to trade multiple times a day because that's bollocks, or look at the news all the time because that tends to be bollocks too, or obsess over every chart movement because that also tends to be bollocks. And I'm not saying you should park your money in the S&P 500 and wait 50 years to make returns because we want to make returns bigger than that. What I am suggesting takes a little bit less time maybe, can make you a lot of money in a bit quicker of a time frame without building yourself another 9 to 5. And the reason I'm so confident is because I've used it for the last 6-7 years. So in this video, we'll go over why most trading strategies are dog shit, what this one that I'm banging on about is, how it's better, and how to use it yourself step by step. And make sure you stick to the end because I'll be sharing a few special examples of trades that follow this strategy from roughly right around when you're watching this video. So first off, why do most strategies absolutely suck? Well, if you watch this last video, I go through exactly why day trading sucks. And it's less even about the strategy and more about the conditions and counterparties that you're facing. I think what most people get stuck with in trading is that they think that luck is really an edge. So they might have, a certain thing that might work for a certain time period, and they might be actually confused that the momentum of the market is them being a really fantastic trader, when in fact what they think is a strategy is literally just the market going in one way and they're able to buy support, for instance, for a week, 2 weeks, 3 weeks. Then it comes the other way and then you get absolutely fucked. Okay? And the issue there is that a lot of these strategies require a lot of turnover, which requires fees to be paid to your broker. And also, the more turnover you have, the more capital in terms of new positions you're putting at risk to adverse conditions. And so the more likely it is that the position is going to go against you and you're going to lose money and you're going to cry and ask your broker for a refund. A lot of people also try to predict rather than just systemize. There are systems in the market that can work continuously. For example, the easiest system right now is literally you could just go and look at a quality business and just buy it. You could have something that says, okay, their revenue growth has gone up by 10% for the last 3 years. That's a quality business. Its market cap is over $50 billion. Let's just go and buy that. That's a system. That is your criteria for buying a company. But you want to get more systematic so that you're more precise. You've got systemized risk management and you know exactly what you're doing. These gurus online don't actually understand any of these things because they don't understand what actually makes money in markets and what can consistently, with the highest probability, keep making money in markets. Those two factors are trend and momentum. They always will be. And yes, of course, it might dip between value sometimes and then go back to momentum. It might go to growth stocks at some point. However, if you're agnostic to the type of company that you're buying and just make your thesis based off of what is moving currently, i.e. buy AI stocks at the moment, that makes most sense, right? Then you are building a system. This is all it is. It's nothing too difficult. However, these guys think that playing around with candlesticks, playing around with funny price patterns, all of this dog shit is actually going to make them a ton of money. You know it yourself deep down. It's not. It just leaves you stressed, anxious, and pissed off. When you're trading intraday as well, you're tinkering too much. You're thinking, oh my God, what is this price level? Do I have to get in here? Oh no, if it goes 5 pips lower, I'm going to absolutely lose everything and I can't enter there. It's nonsense. Just stop listening to all of this stuff. I'm tired of saying it, but I will keep saying it because I actually think people really, really need to hear this. The other thing as well is that there aren't enough indicators on charts. Yes, people absolutely love to hate on indicators. However, you have to understand what the indicators are saying, and actually they can be very useful. So many people have an erection over pure price action trading. And to tell you the truth, back when I was broking, I didn't see any of the execution traders ever, and I mean ever, using 0 indicators. It was always be moving averages, VWAPs, or something else, even RSIs. Like, these people are looking at it on the institutional side, but it seems to be that retail traders absolutely love having a blank chart with pretty lines and that's it. It makes no sense to me. It's complete bollocks. Just wanted to give a big shout out to our sponsor, Tickmill. Now, If you don't know about Tickmill, they are one of the longest running FX, CFD and futures and options brokerages in the industry. They're run by two brothers and they've been doing this for such a long time. And I tend to only work with people who I know are of good nature, good quality and have a fantastic product. I've known about Tickmill for the last probably 10, 15 years when I was at TradingView, various brokerages, and they've always been around as one of the firms that have a fantastic reputation. Now, they offer FX, futures, options, CFDs on over 600 different assets. And I think that is testament to the extent to which they want to cater towards traders who want to go a little bit varied across different asset classes. Now, I'm predominantly US stocks focused. However, sometimes I still have a punt around in FX. I'm just not going to go and tell you guys to do it because I don't think it's necessary for every retail trader. However, we're all going to go and have a punt. So why not do it with a firm who is absolutely excellent and who will go above and beyond to fit you as a customer into their company. Click below to sign up with Tickmill if you want best-in-class execution. Right, so what is the lazy method? Well, it is you pick a single market. In our case, it would be the US, and you would pick the quality companies above a certain market cap from the US. You don't want to be buying penny stocks or any small companies. I know that they can lead to great gains. However, the amount of times that I've seen people buy penny stocks and then a year later it's down 90% is insane. Buy quality, and in the US there is so much quality. I cannot stress it enough, and let the market do its work. Let the US consumer do its work. Let all of the big companies in the US just help you to make money and make wealth from it, because it's insane some of the growth these companies have. The second part of this is focus on trend. Whether you use 4 moving averages or whether you use 2 or whether you use 1 or whether you use a completely different measure, have a trend indicator that can identify whether a company is going sideways or going up and to the right. We want companies or assets that are going up and to the right. You do not want anything that's sitting there flat with really low volatility and doing absolutely nothing. That is called opportunity cost if you are invested in one of these companies, because your capital could be doing something else, i.e. buying a fucking company that's going up and to the right. Now, to further compound this in terms of quality, the easiest way to really just qualify whether something is quality is to buy something with a large enough market cap. In the US though, the problem is that the market caps in terms of quality of what I used to look for used to be 3 billion. Now it's only 10 billion. Because mid caps in the US, and actually large caps in many cases, are actually around the 10 billion mark now. It's insane the growth that the US stock market's having. Having said that, the S&P 500 is 40% concentrated to about 8 to 10 stocks right at the top. So 40% of the S&P 500's market moves will come from those 10 stocks. Take that and have a really strong think about what that implies. Now, how might you position on this? Well, you might want to go equal weight, maybe up to 10 positions. If you have 8 positions with different volatility metrics, you are actually well diversified. However, you might want to get more aggressive, like right now. You might want to risk more because of the AI boom. And so what that might mean is you actually position more into AI than you might do into defense. You might go 10% of your portfolio into an AI stock. Whereas defense, you might only be maybe 3, 4, 5%, depending on what your view on that specific sector is. Now, how much checking should you do? A lot of these platforms these days, and I like to use Barchart, TradingView, and a couple of others actually, which aren't necessarily accessible to the average retail investor, but they allow you to set up alerts. I just get pinged into my email whenever I have to do something, or whenever an asset looks like it might be starting to take off. This is how you can stop having to look at stuff. You just get emailed at the end of the day and you just get told, oh right, do this, do that. It's perfect. You can even set up an AI workflow to do it for you. Yes, that is available. It can trade for you. It is really, really insane where we're going with AI, which again, we're diverging from the topic of conversation really, but focus purely on AI for a little bit in terms of being overweighted, because that is where you're going to make the most money in the next 1 to 3 years. Now, obviously, why is it better than day trading? Well, it beats over trading. We've gone through why over trading can actually lose a load of money. And if you're having to make fewer decisions, I mean, like me, I don't trust myself with every decision I make, then you're less likely to lose money. So basically, less is more. It's kind of like cooking. You're not going to throw a bunch of salt into your food, are you? But sometimes that little extra pinch, that tiny little pinch, makes your food taste absolutely so much better. It also beats prediction when you systemize things. When you've got a system, you can turn your brain off. You don't have to think. You can literally just step up to something, or like I said, get alert, and then you just execute based on what the system that you can trust is telling you. It also beats chaos rules. I don't like chaos, and the market is the most chaotic thing ever. So what I try to tell myself is I just let it be and just let me focus on what I can control, which is, again, that system, and maybe having a little think on the discretionary side if I think there's a better catalyst than what my system is saying, or if something is being picked up in my system, I can go harder onto that stock. I think that's absolutely vital to understand when you need to really, really push and when you need to pull back. Now, it also prevents blow-ups because you can have systematic risk management and trade management at the same time. You want alerts telling you when you have to reduce your position. Again, in the academy, we teach you exactly how to do that. And I think that is possibly one of the more vital parts of trading, is understanding how to get out of your position and actually monetize that position, because I guarantee you, Mr. Viewer or Mrs. Viewer, you have round tripped a position before and you're still thinking about it every single day, and you probably still will until you die. And possibly one of the biggest things is that it completely beats FOMO. It beats fear of missing out, because you understand that when you have a system that's doing and screening things for you, you can see the opportunities that are coming every day, week, month. You don't have to be concerned about going out and finding the next big thing by yourself, because you're just letting the data do it for you. Fear of missing out is probably one of the biggest killers of gains and, at the end of the day, traders ever. You've been there yourself. You have seen something go up maybe 30, 40%. You've then jumped in, but because you don't have a system to understand whether it's right to get in, then you end up losing money. And I've been there a million times. It is one of those things that happen. However, I used to do that before I systemized everything. And this was probably like 10, 12 years ago. Is probably those specific times that I can really, really remember. We can stop doing that. We can stop the FOMO. It's not difficult to do. Right, how do we do this step by step? Well, in front of you, you can see our Discord, and we basically have the stocks from the strategy that are screened going in. Now, it's absolutely zero use to you to just look at this and then go and trade them all. It makes absolutely no sense. So take that out of your mind right now. We're not giving you a free lunch here. What we are doing, though, is pointing you in the right direction. In the academy, we tell you exactly how to then go and take these and then be able to come to your own conclusions, but not in the Discord. The Discord is more community-based. However, it's still very useful. A call every day at 9 a.m. discussing the market and let you know exactly what you need to know, but from a very, very institutional point of view. Now, one that I absolutely love that popped up yesterday is Intel. And so let's get Intel up. This is one of my favorite companies right now, purely because it has been so beaten down and needs its day. It really, really needs its day. Now, this actually follows two strategies that we run. And Intel has been one of 3 opportunities that popped up last year, which we like to call a fallen angel. Now, I'm not going to get into that right now, but from the perspective of this 1-4-10 strategy, what we're looking at right now is a market that has the capability to start moving higher again. Now, what's very, very interesting recently about Intel, and this is where we bring the discretionary part in, is that Trump has actually gone and praised the Intel CEO after denigrating him. The Intel CEO is doing a massive, massive turnaround. The Intel CEO is a pioneer, or the new Intel CEO is a pioneer in the chip industry. He's been around for such a long time, and he actually created a venture capital firm back in the 90s, I believe it was, which actually was a huge, huge investor in the very, very first higher powered chips. I am backing this as being one of the biggest comeback stories that you can get in the whole AI arena. We know about NVIDIA, we know about AMD, but no one talks about the massive American company Intel. Now, their revenue hasn't been great recently, and they faced some serious headwinds, which basically means that their financials have been hit, and they're having to cut costs, but this is good. They were very, very bloated for a long time. Taking that perspective and then now applying it to trend following and focusing it on exactly what we've been speaking about, we can take a look at this chart and potentially come to a view as to where Intel might go now. So Trump, if we just highlight this, Trump basically has said he likes the Intel CEO, thinks he's a very, very smart man. Fantastic, I like that. I like stories from politicians, especially Trump, which seem like they're marking bottoms. And funny enough, this chart looks very much like Boeing did at the start of the year. I can get a Boeing chart up right now just to show you very, very quickly. So if we look at the Boeing chart, you can kind of see similarities where the moving averages, converge. And actually our strategy started right here. This is where we got the first big move on Boeing, and that was only in April. So you can see how long these take to play out. But if we go back to Intel very, very quickly, we can see very similar setups here in that back with Boeing, what happened was the tariffs came in and then Trump effectively made a zero tariff on Rolls-Royce jet engines for Boeing. This massively increased Boeing's margins because they now wouldn't need to pay anything to import jet engines from Rolls-Royce. For Intel, there could be something very interesting here whereby there's been a 15% tax applied on chips that would be sold to China from Nvidia, okay? So if we're taking two of those considerations into view, we're above the moving averages, they've popped into the strategy, the system. They've been shone up in bright lights to me in the system. We're in the right sector, AI, semiconductors. That discretionary basis can sometimes be the catalyst that you need. But we're not doing difficult things here. I need you to understand this. We are not doing difficult things. What we are asking the system to do is tell us, okay, what looks good right now? Then does the story actually fit? You don't need a load of factors. Now the difficult bit actually comes in if it starts moving, because then it's down to you to try and monetize. That is where the Academy comes in and helps you understand how to do that. Because you can have a fantastic idea, but monetizing it is a completely different ball game. And that is the most important thing. I only want to focus there on Intel because I think it is the most interesting and fits the strategy very, very well. Currently, AI, semiconductors, and tech is really the sector that's moving, and everything else right now, as I'm recording this video, that popped up isn't too exciting to me. And so from that basis, I'm not going to go and tell you anything else because I don't think it will be useful. But if you found this video useful, based on a bunch of variables and factors I'm unaware of, YouTube's algorithm believes you'll like this video too. So click here and I'll see you inside.